Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And I just want to say also hello to the dip buyers because apparently they stepped up yesterday right around that 20 daily moving average, once again bouncing from there, showcasing to us that there is a demand, there is buying pressure there. Okay, now guys, there are a lot of YouTubers out there that act like they can see the future, that gets a lot of that they try to get a lot of their followers to be biased traders. Some of these YouTubers are bull biased traders, and some of these YouTubers are bear biased traders, calling the top every chance to get. Good Lord, you know. But here on Uncle Charles' channel, I try to be unbiased and get people to always be ready for any case scenario, the bull case and the bear case. And while they're trying to do prediction, Uncle Charles does not do prediction, okay? When I'm trading, I'm just identifying the levels and the setups, and I try to trade them based on the price action in real time. I trade them in real time, and we are just trading based on probability. Okay, we're trading on based on probability, and we're trying to take the high probable trade setups. Does that make sense, guys? And of course, when you're trading based on probability, that also means there's going to be time where the setup does not show follow through. There's going to be times where you do get faked out. And when that happens, all you got to do is swallow your pride, accept that you're not always going to be right, and just cut your loss. I, Uncle Charles, respect the trader that respects his stop loss. Seriously, risk management comes before profits. Okay? So now that you guys know Uncle Charles' mindset, I showed you guys many times how I try to trade these levels that I give you. I give you guys my levels, support resistant levels that I get from the daily and the weekly chart. I apply them to the 15-minute chart. And look at this here. What happened there, guys? Well, that is the 10-15 candle. All right. I have a Discord if anyone would like to join. I do have a Discord. On my Discord, I give intraday analysis throughout the day. And I wrote on the first post of the day, 584 is first support. Okay, 584 is first support. That's this level right. That's this line right here. I'll change the color to pink. That's 584. That's first support. With 586 as first resistance. Okay, this is 586 level. I'll change the color to yellow. Okay. And I wrote, if it clears 588 and 590 plus in play, and then that's the bull case scenario. And I wrote for the bear case, if 586 defends as resistant and 584 fails, bearish with the lower targets in play. So all we're doing is identifying the levels beforehand, and we look to trade them in real time, in the presence, whatever the price action says. So what is my green arrow pointing at? I mentioned if 586 clears, more upside is possible. 586 cleared on the 15-minute chart. Do you guys see that? What happened? The context is this. On the 10-15 candle, SPY closed above my 586 level. So to me, I consider that a breakout. And then the 10-30 candle, it treated that breakout level, that resistant level, as a support, showing us that resistant turn to support, confirming to us price action wise, no indicator, no crystal ball, no Michael Burry type of crap, just good old fashioned price action, showing us that the sell level turned into the buy level, and it pushed higher, hit my 588 level. And what happened at 588? It hit 588 on the 1045 candle. Initial test, little small rejection, but it didn't break down on support. I only trust rejection from support, rejection from resistance when it breaks down support. Okay? It's little rejection from resistance did not break down support. Instead, we got the breakout. Look at that. Do you guys see it? The 11 o'clock candle, we cleared my next level at 588. This right here at 1215, it treated 588 as a support. So once again, resistant turning into support. Is that bullish or bearish? The price action speaks, and we must listen. Once 588 turned from resistance to support, it bounced and hit the next level. What did I say the next level was? 590. Okay, 590. And then from the rest of the day, I was surprised, but for the rest of the day after that, we just kind of drifted up to the 591.5 level and just lost its strength. But overall, once again, guys, just trading sheep style, level to level, worked out beautifully. And this is why I give you guys the levels and setups. I'm trying to give you guys actionable trade ideas. I'm not just telling you, hey, the market's going to go up, buy every dip. Hey, the market's going to go down, short every bounce. That's not what I'm saying. I'm trying to give you guys teach you guys the mechanics, the little small details, because those little small details lead to the bigger picture. Does that make sense, guys? And level to level stuff. Oh my goodness. Great for day traders, great for short-term traders. And it can be great for swing traders too. This idea, this approach to using the price action can be used for swing trading as well. The only difference is for swing trading, you wouldn't use a 15-minute chart. You would use a 4-hour chart, daily chart, weekly chart. But you would use the same principle of what I'm showing you on the smaller time frame. You would just apply it to the bigger time frame. And that's how you would swing trade with price action. But right now, I'm showing you guys how to do it with day trading because I'm an impatient person. I don't like to wait more than a day or two to get my money. I like to day trade, and I like to do it level to level style with runners and all that happy stuff. Okay, and I'm showing you guys. Now, this what I'm showing you guys is not 100% thing, but like I always say, all you need is 51% accuracy. You just need to be a little bit more right than wrong. With good risk management, if you don't, that's the risk management. If you don't have the good risk management, you will not be a profitable day trader. You won't. If you trade with ego and you feel like you have to be right all the time, you will not be a profitable day trader. You got to be okay with being wrong. Okay. If you want consistency and not worried about being wrong, you go get a regular job. Day trading is not a regular job. You got to be cut from a different cloth. You got to be built different. Keyword is built. You don't just born different. You built different to be able to live this life and be a successful trader. But what I'm trying to do is to show you guys the simplicity of price action trading, because there's going to be a lot of other people that's trying to be fancy with it and they try to make it sound like rocket science and all that happy stuff. No, okay? Keep it simple that even a 5th grader would understand it. You understand what I'm saying? Anyways, I hope you guys get this part. Let's get to the daily chart. What next, guys? What next? Are we going for more upside? What is the context? Well, not only did we get the bounce from the 20 daily moving average again, I mentioned to you guys that we did have an inside candle set up with Friday's candle being the mother candle. Okay, and when we do an inside candle setup, we look at the mother candle's range, which represents the chop range. We want to see the breakout. I had it at 590 for resistance. We actually did clear 590. Not the strongest breakout, but it's technically still a breakout, okay? So if there is more upside to be had, SPY must stay above 590, okay? Must stay above 590 to keep the breakout intact. And as long as above 591.5, 593, which is a fib level, and 595 will all be in play. And above 595, I think, in my opinion, a bottom is in. Also, keep in mind, above 593 would invalidate the island reversal. Okay, it would invalidate the island reversal. We also got to be careful that SPY doesn't gap up too much, because if it does, we could enter another bullish island reversal. Island reversals into island reversals. Okay, it happens, and we got to be prepared for it. But overall, above 590 is bullish. Clearing 591.5, 593, and 595 should send SPY to more upside. I show you guys how you want to trade them using a 15 to 30 minute chart. You don't have to copy me, but just find what works for you. 15-minute chart works for me. Does that make sense? Because we're all different, but maybe 15-minute chart will work for you guys too, you know. But if we are to be bearish, remember, Uncle Charlie doesn't call tops, but usually when a top is in, it usually comes in the form of an exhaustion gap or a false breakout. So if we are trying to play the odds and we want to try to play towards the bottom, towards the downside, we need the price action to be in our favor, which means if we are going to look to short, we need to see 590 fail and 588 fail and 586 fail. We need to see support levels fail, similar to how I show you on the 15 to 30 minute chart. So Ty, when it get too choppy, I move up to the 30-minute chart. But luckily yesterday it wasn't too choppy, so we got some direction. But yeah, we break down those support levels. That's when I would start to look to short, and especially below the 20 daily moving average. We clearly see that there's buying pressure, that there is a demand down there. If we can lose that 20 daily moving average, I would favor a much deeper sell-off, possibly all the way back down to 577 to retest my multi-month uptrend line over here. Okay, maybe I only have 2 touches on it, so it's not too official. Some people get bent out of shape on that when I get trend lines with only 2 touches. But I'm just tracking it to see if we'll get a 3rd touch. And if we do, it'll be around 577 to the 579 area. All right, but we won't get there unless we break down those support levels that I mentioned. 590s to start to invalidate yesterday's breakout of the inside candle setup. And breaking on 588 and 586 should give us another test of the 20. And breaking down the 20, bears will be in full control. Okay, so I gave you guys the bull case scenario, and I gave you guys the bear case scenario. Now it's on you guys to trade it unbiasedly, whether it's to the upside or to the downside. Most important thing is to get your P&L green. QQQ also broke out its inside candle setup. Okay, so overall bullish above 503.5. I would say 503.5. Can round it up to 504. You know what? I'm going to stick to 503.5. With next resistance is my fib level at 505.5. It's a $2 space. You know, $2 space a little big for Uncle, but I got to go by what the chart showed me. Okay, so and what it showed me is that support's at 503.5. As long as above, next target's at 505.5. All right. If it can clear 508 would be the next target. There is a gap around 508.6. So 508 fib level, 508.6 gap level. So up to you guys what you want to target. You can just give it a zone. And above that gap, I got the 510 fib level and the 512 fib level as targets above. If we are to get bearish, then we need a false breakout minimum. We need more, but a false breakout to start. That would mean 503.5 would need to fail to put 501.5, 500, and 497.5 back in play. Where is that 20? Yeah, to get back below the 20, QQQ would need to break back below 500. So I would be bearish below 500 overall. Tesla got a bounce yesterday. However, it did end the day, as you guys can see, with an inside candle setup. So we are in a chop area. So to end the chop bullishly, though, it can still end. This is a very volatile stock. To end the chop bullishly, 346 and 348 must clear. Above 348, I would be bull bias and favor the chop ends bullishly, and we'll definitely break 350 or higher. Maybe get above 357. Now, if we are to drop to the downside, 344, 342, 340, 338, all must fail to put 336 and 334 in play. However, the big level that must break down to end the chop bearishly is 330, based on the mother candle's low. 330 is the level that must fail, and bears will take control. But before we even get to 330, plenty of levels, plenty of setups to trade before we get there. If we lose 344, 342, we'll likely get a pullback. Like I mentioned, 340 or lower, play it level to level. And if you want to go for the home run move, do it with your runners. Let your runners do the home run move. You play a full position, go for the base hit. Always safer. NVDA going for the bounce as well. Hello, dip buyers. Well, I mean, the M pattern did technically play out. If you go to a 6-hour chart, you can see the M pattern more. I mean, it technically played out. It just didn't. It technically played out. It just didn't go as low. But it looks like a good correction of this up move. A good retracement. Definitely bounce. Let me get back to the daily. Now, if there is going to be more upside, I still have that fib level at 143.5 and the strong sell zone around 149. If this is truly a bottom and not a lower high, 147.5 and 149 once again must clear. We got to be consistent with this and be disciplined. Stay disciplined. Clear those levels, more upside as possible. And the difference is between last time, no divergence, no bearish divergence, and we're not in overbought territory. So, I mean, if bulls are going to do it, they definitely have the opportunity to do it this time. But the price action must confirm and clear those resistant levels that I mentioned. If this is just a dead cat bounce, then 146 and 144 must fail again. And if those levels fail, yesterday could be a dead cat bounce. Give us that dead cat bounce context. Put in 142, 140, and 138 all back in play. Possibly lower this time, okay? IWM got the nice bounce. Cleared 228. Where did it close? 230.6. So it also cleared my 230 level. And as long as above 232, 234, and 236 are all in play, I'll favor previous all-time high or new all-time high if we can recapture 236. If we are to be bearish and make yesterday a dead cat bounce, the price action must tell us that by breaking down 230 and 228 to put 226, 224.5, and 222-ish all back in play. Apple managed to give us a little bit of a higher close yesterday. Managed to stay above the 50 DMA, but did not manage to clear that annoying 228.4 level or the 230 level. Okay? I have to say it again, guys. 228.4 and 230 both must clear to put in the bottom. The bears are doing their best to prevent that from happening, as you guys can see. And bears, if the bears really want to make a statement and show that the bulls aren't going to break those levels, then they need to get Apple back below the 50. Okay, there's a battle there as well. And the 50 is around 227. And so getting below 227 would definitely be a good sign for the bears, putting those lower targets in play, 225, 223, and 221.5. Okay, losing the 50, bearish. Clearing 228.4 and 230, bullish. Amazon with the bounce yesterday as well. If it's going to continue, well, I have next resistance at 204.7. So if it's going to continue, that level must clear to put 206, 207.3, 209, and 210.5 all back in play. If yesterday was just a dead cat bounce, then 203 and 201 must fail to put 199, 197, and 195.3 all back in play. Meta with the nice bounce. It was in, it was in the lower Bollinger Band, very far from the 5 DMA. It was bound to happen. Can it continue? Staying above 562 would be a good start as a Fibonacci support now. And if it can stay above 563.5, 565 will all be in play. The 50 DMA is around 570. So if we can get to 570 and back to it, that would be nice. But I can't fully favor a bottom isn't unless we can recapture 570. And the 20s are on 574. So bears got a lot of work to do. But if this is just a dead cat bounce, 562 and 560 must fail to send Meta back to the downside, possibly all the way back down to the 550s. All right. Microsoft, we recently lost a fib level at 418.7 last Friday. Microsoft did not recapture it officially on the daily chart. However, it's trying to gap up right now. It's around 420.5. So support is at 420 and 418.7. As long as above, Microsoft could possibly head up higher. All right. Could possibly head up higher, 422, 423.5, 425, 426.5, and 428 would all be targets. There is a gap up there around 425. But if we break back below 420 and 418.7, this is just a gap in crap with 417 or lower back in play. Here is DXY. It looks like it's consolidating. Since breaking out the structure, look like it's trying to flag. So it's not very, it's not bearish. Okay, and if there is going to be some bullish continuation, then once again, it needs to break out 107.1 to put those high targets in play. 109 will be a target. All right, I have support at 106.1 and 105.3. Gotta break it down. I'll be bear bias below 105.3. And yeah, it's just flagging right now, guys. Coin, a little bit of choppiness yesterday after an amazing day on Monday. Was hoping it continued, but it didn't. But it is bouncing up a little bit. I have next resistance at 328 and 329.5. If those levels can clear, 331, 333, and 335 would be targets for coin. Much higher targets in play if 335 can clear, right? I can't favor a drop unless we start breaking down support levels. Okay, so I have support at 326, 324, 322, 320. Those levels fail. Very likely we head down to 316 in the 312 area. DOGE, it did officially recapture my 38-cent level yesterday. Is trying to test it as a support. Hopefully it can hold. And that would keep 40, 44, and 50 cents all in play, okay? So we got to watch out for a false breakout. If you break back below 38 cents, might be stalling, might not be ready to head up higher, okay? And Bitcoin looked like it's trying to head up higher. I have the next fib level at 93.3K. And if it can clear it, we're likely heading up high. Well, most likely heading up to, I have the next target at 95.7 thousand and 98.6 thousand. And then the big 100,000. But it's going to have to clear 93.3 thousand to get there. Okay, we'll see if it does. Once again, support is still at 91 and 89.1 thousand. Okay, and yeah, that's all I have for you guys today. Thank you guys. Please hit that like button, and if you didn't already, please subscribe to Uncle Charles' channel. I appreciate you guys for being here. Peace.